Welcome to Fitzon's Property Exchange, hosted by Pearl Skeltimer, designed to keep you informed and captivated about the South African residential property market. Subscribe to our channel today and enjoy conversations with some of the most influential, innovative, and interesting industry experts, stakeholders, and scheme executives as they render input in today's property market.
Hi, good day. I'm Pearl Skeltimer, the CEO of Fitzon Estates, and once again, welcome to Fitzon's Property Exchange. I would like to introduce a very interesting man, Mr. Michael Schaefer. He is the founder of ZFIN. He is the former director and co-principal of Trafalgar Property Services, where he was the driving force behind Trafalgar's financial services capability and also overseeing Trafalgar's Gauteng and Western Cape operations for 18 years. After identifying an opportunity in the market to better cater for bodies corporate and scheme finance, an area grossly underserviced, he started ZFIN early in 2020. Michael's background in property management and property financial services positions him perfectly to assist schemes with their financial requirements. Any time out of his busy work and travel schedule, he spends either on his mountain bike or scuba diving. I think that's just bragging, Michael, especially giving that information to our Gautengers. Welcome. So, Michael, let's kick off. ZFIN, exactly what does ZFIN do?
So, Paul, thank you very much for inviting me and giving me the opportunity to speak to yourself and your listeners. Yes, indeed. So, very interesting year as we were chatting about previously. My background is very much in property management. It's what I've lived and breathed for close to 20 years. I've left Trafalgar and I've started off ZFIN. ZFIN is a specialist finance boutique house focusing on the residential scheme market. It's an area that I think is grossly underserviced with, a few credible players in the market. And I think there's a massive opportunity to better service residential schemes with regard to finance requirements, especially with regards to the new legislation, which is now, just over 4 years old.
Okay. So in other words, ZFIN provides finance for struggling body corporates.
Yeah, so not even struggling, Paul. I think it's a question of, yes, definitely buildings or schemes that are under a degree of financial distress. Certainly we would consider and provide financial assistance to them. But I think also well run and, capitalized, I suppose, to the scheme, assisting, trustees to fulfill their fiduciary duties, specifically with regards to maintenance. I think, the difference that I have, perhaps over my competitors is, my intimate understanding and my experience,
yes, your background specifically.
to the property management. I feel for trustees, in many instances, they're just well-meaning volunteers. They step up to serve the body corporates and to ensure, value sort of maintained in what is typically the largest sort of investment. But very often trustees face, the typical conundrum where, they need money to maintain a building, or to, see to sort of required works. But I mean, how often have you been to an AGM where, budgets are shot down because, owners either can't afford it or, they don't necessarily agree that work needs to be done.
Yeah,
and
that's right.
It leads to erosion of value, which is to the detriment of the collective. So, again, in my experience when the legislation came out, and there's the requirement to get the maintenance plan, when one's doing the computation of the reserve levy correctly, in accordance with the maintenance plan, and I mean, I think we both know the maintenance plans and the maintenance plans, and let's just assume that it's a professionally, well done sort of maintenance plan with accurate estimates, as well as correct combinations of scopes of work and that type of thing. The necessary levy increases to fund those works over a 10-year period are just not practically affordable. And what do trustees do? If they go to an AGM and they say, well, I honestly saw 1,000% levy increases, which, obviously are not, not practically affordable and are not going to fly. I mean, in my previous life as a managing agent, anything over 12% was flagged for, um, consideration to, sort of see what, why sort of a fairly large above inflation increase was necessary. And, just what I found is that very often, the work is not often in disputes. I think, owners accept the fact that the work needs to be done, but, it's always an affordability issue with regards to actually funding it. And, what do trustees do? They're kind of damned if they do, they're damned if they don't. And, the other issue, and I touched on it briefly with regards to the maintenance plan, is, there are very definitely maintenance plans and maintenance plans. And, very often to, activate or to commission, a truly professional maintenance plan costs money.
Yes, it does.
Very often, schemes, we all know, schemes very often sort of under budget. And I mean that with respect, and very seldom do they do cash flow budgets. So, when there are arrears and then the legal fees and collection fees necessary to chase those arrears, very often, there aren't sufficient funds to enable, a very professional sort of maintenance plan. And again, they're just generalized sort of comments. And what we've done, because I think, again, and I think it's also a differentiator, for ZFin, is, we're not about to go and lend blindly, which I think is irresponsible. And what we like to do is, combine the correct, sort of technical expertise, in the process of considering funding. So just to better explain, if a scheme had, maintenance issues, or maintenance issue and approached us for finance to address or to assist them, we would commission, we've got a number of, sort of youngish to older, sort of industry veterans, but, typical structural engineers, quantity surveyors and the like, who will do work on risk, that will go out there because of work
So
that...
let me just understand this and recap. So ZFin provides finance. They also advise on the maintenance plan and the implementation thereof, and the financial side, having to budget in order to finance this.
Absolutely, because without the correct technical expertise, the numbers are kind of meaningless. And, so what we'll do is we'll get, they're typically middle-aged, well qualified sort of entrepreneurial, professionals that will go out there and they'll do the work at risk. So they're not on my payroll. We work with a number of them. They'll go out, they'll do a proper building audit. They'll do a proper maintenance plan and sort of report and recommendation. And they'll give, reasonably accurate. So when I say reasonably accurate, I'm talking 90-95%, degrees of accuracy numbers that at least we can then model and sensitize the trustees to actually what the costs are. In the event that they're happy to proceed, we'll then run full tender processes, or they'll run full tender processes, literally come back in closed envelopes, deliver to the trustees with, the summation of the tender plus a recommendation. Obviously, nothing will happen without the trustees' authority and sort of go ahead. But, we then couple it with the finance to enable it to happen. But I think the important thing as well is kind of the scope combination. So, the one that's the easiest one, for me to understand is kind of scaffolding. If you're going to put up scaffolding, then do every discipline that requires scaffolding, because it's such a large sort of cost component.
Yeah, the requirements, etc.
Absolutely. So, maybe you delay the project because nothing's critical. Rather delay the project if there's nothing critical until sufficient funds have sort of been built up. Or if there are critical elements like spalling or, things that need to be urgently addressed, then rather bring other disciplines forward so that you get maximum cost efficiency. But very often, schemes that have got a degree of financial distress don't have the option. So what we do by providing, first of all, we enable, or we provide we facilitate, that's a better word, we facilitate the technical expertise, and we also provide the financing to unlock that option for the scheme. And so what you find is with that efficiency, the simple logic is that the cost savings, in my opinion, far outweigh, the interest and the finance fees. Yes, because obviously there are interest and finance fees, but the idea is that, they're offset by the cost savings, by the efficiency of doing things correctly up front.
Okay, Michael, allow me
Yeah.
to go to the next question. How does ZFIN differ from alternate scheme financiers?
Well, I think we touched on it, Paul, and I think it's. I like to get involved. My 18 years, I've been very much in the trenches, so I understand. I understand the frustrations and the predicament that managing agents find themselves. And they're very definite sort of as well as trustees. So I understand what the challenges are at a practical, at a
Okay,
practical.
so basically what you're saying is the difference between you and the alternate ones is the fact that you have the background, the fact that you were working on the other side, if I could put it that way, for many years.
Absolutely, and that's not to detract from our competitors. I think and it's also a massive market. So I think there's space for all of us. But what I like to think my differentiates is exactly that. That I think I
Okay.
understand the practical challenges and the nuances of property management. I mean, I'd hate to know the number of hostile AGMs and SGMs I've attended. Where there are very real problems, and we want to try and assist the trustees as well as the managing agents come up with practical solutions.
So how does ZFIN view itself in relation to managing agents?
Very definitely as a support. Very
Okay.
definitely as a support. So again, in my experience, in my previous life, where let's just use a practical example. If a project had to be undertaken, very often what would happen is, well, practically what would happen is the trustees would ask the managing agent for three quotations or three contractors that could quote, and you get the proverbial Jan, Pizza, Mike that would quote on the job. And
We
obviously
know all those. We know all of those.
exactly, and the disparity between the quotes, is anywhere between 50 and 60%. Because what you find is that Jan, Mike, and Pete are quoting, in accordance with that, with what they think needs to be done. Obviously, no malicious intent and they're well intentioned, but you're not. So what you find is that the trustees aren't necessarily comparing exactly like for like, which first of all is an issue. And from a managing agent's perspective, is very often because they propose or they've given the three names of the contractors. Very often, they assume to almost guarantee the work and the workmanship of those sort of contractors, which isn't necessarily fair. So,
Okay.
with us, effectively, soliciting or not soliciting, facilitating, that initial technical sort of expertise at no cost to the scheme at all. Which is often like a bit of a stumbling block because there's a cost component, so it very often doesn't happen before. And again, I'm generalizing, but
Okay.
it
Can
doesn't
I
happen.
ask you
Yeah.
something? When assessing a scheme or once being approached by a scheme in order to assess what needs to be done, how do you work out the cost? Is this a fixed cost? Is it determined on the number of units? Is it determined on the number of time spent? So, how does the cost structure work? If a body corporate would require your assistance, what kind of expense are they looking at?
No, so we don't charge for our time at all. Our
Okay.
cost would only come from the finance component. So all of our effort is really to assist, and in the event that they do require finance, we would then derive our income from the finance, the interest and the finance fees.
Okay, thank you. Um, I have heard this often. Why are there negative connotations associated with scheme finance, and are these warranted?
So, Paul, I think that certainly is a very good question, and I think very definitely there is a negative association with sort of scheme financiers, but I think it's more attributable to the levy financiers. And in my previous life, when I was at Trafalgar, I did run the financial services company, and levy finance was a product that we offered, and it is one that I am offering now through ZFIN. And I think one needs to just sort of unlock exactly what it is that one's providing. And I think just from my practical experience, I think there was often a frustration on the client sort of perspective in that we're all dependent on the legal system. And and again, I come back to the fact that I never have and I never will lend blindly. So what is
Sorry,
what
just repeat that. You
I'll never
will, and
lend. We'll never lend blindly, and that's, I
okay,
think, it's very dangerous to
yeah,
take
risk,
finance for
quite a
levies.
big risk.
Yeah, absolutely. So, my team, I've effectively taken my levy finance team, have migrated across to ZFIN with me, which is no less than two attorneys. So we've got an intimate understanding of the legal system, what is required, and, we operate in the kind of proverbial grey as well, to ensure that, we get the money back. Because it's perceived, and not even perceived, because it is a higher risk finance. Your interest rates are higher, plus you've got legal fees, which are
Yes.
then all sort of capitalized, and time. Because you're dependent on the legal system, which isn't massively efficient. So, it's kind of a toxic mix of time and cost and fancy interest rates.
Yeah.
You absolutely can't be, you can't neglect it. You've got to be 100% on top of your game. And as I say, you need to be prepared to, play in the proverbial grey to frustrate, defaulters' lives, to, encourage them, should we put it that way, to
Okay.
pay
Now,
their,
I was wondering about that because if you provide finance to body corporates and they're not in a position to repay, I mean, what guarantees do you have? How do you collect? So, yeah, I understand that all of this goes into it. Can I ask, when should trustees consider utilizing finance? At what point? Before the AGM, after the AGM, once they realize that they're not deriving enough income, at what point should trustees consider approaching companies like ZFIN?
So, Paul, I think first of all, if there's any sort of financial distress, certainly, scheme exec should, sort of consider the prospect or the possibility of finance. If it's an issue that the budget is incorrect, then I think, certainly that would be the first port of call to, correct the budget. But, if it was, so it's multifactorial. If it was a cash flow issues and constraints, but, the budget was correct and it was a high level of defaulters, certainly levy finance, should be considered, because in some instances there is no sort of option. But again, I'd caution scheme execs as to, which products exactly, they consider and sort of take forward. And I'll be happy to, sort of guide any scheme execs in that respect. And then, sort of secondly, I think if it comes to maintenance, which is your more sort of vanilla funding, I think that, if there's a backlog of maintenance, I think now, especially now with COVID, a lot of scheme execs will be under pressure to delay large sort of maintenance projects.
Yeah,
And,
that's true.
I would caution them to, I think, certainly in the short term, it's probably prudent just to regroup and, sort of see what's going on. But, the fact of the matter is that, the maintenance work needs to be done. So, if it's not done now, when is it going to be done? And I think, we know that, leaving maintenance or ignoring maintenance, often results in exponentially increasing costs.
Yeah, correct.
Depending
The
on the
sooner the
state of the
better.
building. So there's not one, one or two sort of set rules. I think, there are a number of factors that need to be taken into account. But I think, if scheme execs are concerned, because the visual estate of the scheme is deteriorating, or there's some sort of, sort of obvious issues. I think the first port of call to approach an outfit like ourselves, where there's no sort of obligation to get the correct technical expertise on site to actually, assess and then, give an objective sort of opinion on what has to happen. And then depending on that report, as well as the estimated associated costs, finance could well be, could be recommended, given, it might be, massively more expensive, or it might actually be, a massive risk by delaying finance. There might be safety concerns. So I think there are a number of factors that do need to be considered, as well as the nature of the nature of the issue. Financial
Yeah, correct.
pressures, or is it maintenance and, sort of, associated risks. And yeah.
Okay, Michael, that was quite a mouthful. Thank you so much. And if my clients or any other bodies corporate is interested in the services you render, where could they get hold of you?
But I think the easiest is on our website, which is www.zdfin.co.za.
Okay, thank you for that. Michael, thank you so much for spending your time with us. This was quite interesting. It was nice to listen it from the other side. As you call it, we are still in the trenches. So you are the lucky one. Thank you so much for your time. Ladies and gentlemen, I hope you found this interesting. Please subscribe to our Property Exchange and we will talk some more. Thank you so much.
This was Fitzon's Property Exchange, hosted by Pearl Skeltimer. Not only do we keep you informed on the very latest in the property industry, we also empower by expanding your knowledge base. Make sure to visit www.fitzon.co.za to find out more about sectional title scheme management, letting, sales and trustee training. Remember to subscribe to our channel and follow us on all our social platforms.